Good morning. Welcome back. We have some pre-market activity here today with Goldman Sachs pre-market as well as Netflix after hours, which virtually exploded on a gigantic number of new subscribers. 3.9 million, I think, if I'm not mistaken. But we're actually down on the futures pre-market today, which is why I'm actually pulling up the intraday charts of the spiders. I just wanted to briefly talk about what's going on at the end of the day. We mentioned this a couple of days ago. It's been more common in the afternoons for us to be having sell-off, which means that institutions are actually in charge of the close. There's a lot of flurry of activity that goes on overnight, which you're seeing in the gap. We had this first 15-minute push to the upside, and as day traders, the market is just driving everybody batty right now, and you can see that in a little bit longer-term picture. What I don't like from a longer-term perspective is we're getting these whippy-type price actions, and I don't want to give a percentage, but let's say more often than not, when you get tighter activity after a push to the upside and a flag, there's greater likelihood of following through. All of this mess is it's just not clean price activity. When it's clean, you get quieter price activity, for lack of a better way of putting it. Slow grinding trends last a long time, and tight patterns for continuation more often than not are continuation patterns, and we're not seeing that right now. So with the Netflix earnings and it exploding higher after hours, but the futures being down today, it's probably foreboding that we are going to have a lower opening this morning, have our first push to the downside, and then I would be waiting a little bit for the dust to settle in the morning before I got a little aggressive. Yesterday's gap killed any intraday trading if you're a futures trader, which quite a few of the people that are listening to this are. So again, I know it sounds like a broken record, but it's absolutely the truth. If you want to be a long-term consistent trader, you must learn when to push it and when to be aggressive, and we're not in an environment right now where we're getting a lot of trend days. As a matter of fact, the lower opening this morning should lead to finding a bottom and then looking for a spot to bid. We are in a longer-term uptrend. There's not even a question about that. It's the higher openings that are chopping around that are really muting the opportunity. So I just wanted to point that out on the intraday charts. So we're going to zoom back out to the weekly. So we're always looking at the weekly and the daily here to get a picture. I just want to touch on one other stock, CI. Pretty big pullback yesterday with not really a heck of a lot of news other than some earnings coming out in the sector. But if you like this sector, you want a healthy pullback right now. You really want this stock to pull back a decent amount so you could find another spot to bid for it. It's been such a good, slow grinding uptrend. Look at how we're talking about beginning of February, maybe end of January, is the only time since January 12th that the stock is closed below the 20-period EMA on the daily chart. That is a really, really strong stock from a relative strength perspective. Okay? So you want this to pull back, probably a lower opening if you find a bottom and you're a swing trader, maybe looking for a short-term reversal pattern there to look to get long. As far as earnings are concerned, we spoke about Netflix yesterday, opening up a gigantic number above this 480 level. I think it was $50 higher, if I'm not mistaken. I'm not using pre-market numbers other than just showing you the futures real quick because I just want to go off the charts. So good news there. Citigroup actually has earnings as well today. Citigroup's after hours. Goldman is pre-market. We're not going to get into the pre-market calling of. It's just and the reason I do that is it's just a completely different animal trading pre-market compared to regular hours. Actually, myself and a couple of other really experienced traders had a long discussion about trading post-market just last night, as a matter of fact, over dinner. And it's a completely different animal trading pre-market. You're not really using the charts as significantly, and a lot of traders just don't have the experience to read the tape, just watching level 2 and time and sales to get a feel for where it's going. So if you're not an experienced trader during regular trading hours, I do not recommend you start to trade pre-market. You definitely want to know the catalyst. There's not a question about that. All right, so Citigroup, you can see here that, let me actually zoom out. You can clearly see this level here, 54.50. Again, if you're new to listening to the audio or the video, I don't necessarily blindly just draw the lines at, oh, it went all the way up here, and that's where I'm going to put it. I'm looking for a price level that price gets to and gets rejected or stays above. And you could clearly see this 54.50 level is what's going on there. We pushed through, immediately got slapped up. Bounced, came back. Pushed through, immediately got slapped. Pushed through, immediately got slapped. So yeah, it'd be very easy for you to put that up there, but that's not the real number. The real number is here where price keeps getting rejected. That's the level. So 53.21 closed yesterday. It looks like we're approaching that level again if we get good earnings today. Although it looks like we're going to open lower today with the futures. That's the level. Regardless of what the catalyst is, that's the level. You want to pull yourself out and say what's actually going on in price action. Just don't blindly look at the charts and not dig in. You got to dig into the charts and see what's actually going on. And that's why I tend to call it order flow and not just a trend. You really have to get into your own head and say there's real buy and sell orders behind this. What's the order flow in this stock? Is an institution bullying this stock around and pushing it higher, supporting higher highs, higher lows, or are they dumping supply on it? What is the order flow? Are buyers or sellers definitely in charge of this stock or not? Next we have Goldman. We've been talking about this 195 level for a while. Let me actually zoom out here. And that's why. Okay, again, we got up to that level, got up to the level again over here on the weekly chart. Yes, we pushed through. We got pushed through, got rejected. Pushed through, got rejected in the big time. And now we got 2 solid days in a row heading to earnings. So it's going to be very, very interesting. Now, from a short-term trading perspective, a higher opening is a really crappy buy in this stock right now. You have essentially, even though these are indecision candles here on the daily chart, you still have 1, 2, 3, 4, 5, 6, 7, 8, almost 2 weeks, maybe even a little more than 2 weeks of price action moving higher into earnings. So you do not want to be buying a higher opening. You want to be looking for a spot to bid. And again, I'm not using the pre-market numbers here. And that's basically it on just looking at the stocks that are in play in the financials this week from a news perspective. There's a couple of other stocks, American Express today as well. Little longer term picture. I actually like it or prefer it on the short term time frame. If you're a pure technical analyst, you're looking at a possible head and shoulders here with the neckline here that we've already penetrated, already bounced back, held resistance. You would expect for another push to the downside with this level down here at 72 being the first support, but again, earnings coming out, we'll see what happens there. So we're going to pause this and jump right over to do a little scanning. Alright, so again, we are going to jump into stocks with a certain amount of average true range, a certain amount of volatility, and look for stocks that are trading with the market first and then showing relative weakness against the market. So I'm going to go into my screener. Again, this is the free version of FinViz. Everything I'm about to show you, absolutely no cost. So I'm going to go into my presets, and you can see here I have volume, certain price, and a certain average true range. So you can see it's over $20. Oh, there's proof again that I'm using the free one. Over $20. $1.50 average true range, over $1.50 average true range, and over 2 million shares. You can see that pulled up 89 stocks on Wall Street that match that criteria. I could probably go down to 1 million for average volume and pull up a little bigger list, but this just happens to be a little uncomfortable. My point is I'm showing you what I use so you can tweak it for it to match what you like to do. You might want to go down to 500,000. You might to trade a little bit little less volume on those stocks. That's completely up to you. Again, my job is to show you guidelines that you can put into your own criteria. So we're going to filter this down even a little bit more. We're going to go trading above the 20 period simple moving average, and we'll see, okay, that actually filters down only 20 stocks out of that. So again, more proof that the longer term picture is still bullish. Institutional order flow is still bullish. We're just getting some really ugly price action to trade on a shorter time frame basis. So let's go out to performance. Again, whether you're day trading or swing trading, I prefer to look at how the stock is traded for the last quarter. We report quarter to quarter, so we want to look at that. We had a pretty good story on CYBR on the blog last week on a possible short squeeze, and we're still getting a little bounce. So essentially what we did was we filtered it out first for the criteria, filtered it down deeper for price above the 20 simple moving average, and that pulled up 61 stocks. So first we're going to look at a technical picture, and then we're going to go and look at change from the open from yesterday just to pull up and see exactly which stocks closed strong to possibly look for a follow-through on the open. So we're going to just zoom over to charts, and we're going to look at any price levels. Interesting, this is not a uptrend, however, it is actually potentially filling the gap here and having a nice slow move to the upside. So again, this is actually a stock setup that a lot of people get stuck on. A lot of people, including myself when I first started trading. A stock that you think is changing direction, or I should say not moving aggressively in the previous direction, is not a good trade in the new direction until it's confirmed. Every single trader worth his salt will tell you, I made the mistake. Don't pick a top, don't pick a bottom. There's no reason to get in early. You're going to be like the pioneers with the arrows in your back. Let it be clear. So this is still, in my opinion, a potential change of trend. It is not an uptrend. If you are a longer term trader and you want to start accumulating a position, that's different. That is very different than saying I think the stock is a long today, because that's not a long today. Okay, it's a potential breakout from a downtrend. More money has been lost trading, shorting stocks that are going higher and buying stocks that are going down. This is not necessarily going down, but I'm trying to make a point. Trying to get in too early. Now, FSLR, a little different here. I'm actually going to pull that up on the other chart here so we can see that a little more clearly. Okay, weekly chart has a little bit of room, 63 to almost 74, so we've got a little bit of room, but look at how clean that break is on the daily. Wow. That is a nice looking picture right there. So FSLR, pretty good technical setup there. All right, let's go back to the other side. VRX, pharmaceuticals are tough, man. That's a whole different animal as well. LYB, actually nice breakout from consolidation there. See, this is a little different than the other one. This one, where the heck is it? This one here, clearly not momentum to the upside. It's just kind of a slow grinding trend. You know what? Let me actually put that in the other one, and I just want to see which ones I'm comparing here. All right, CLR. Okay. That is clearly not a stock you could say, man, the buyers are definitely in charge. Last 4 weeks, maybe. You know what? Actually, looking at it on the weekly chart, that actually looks better than it does on the other one. That's a different picture. You got a double bottom here. You know what? Let's reevaluate that sucker. You have a lot of reasons to be looking at this. You have a failed test of the lows, not quite a double bottom. You had pushed off, held the low. A lot of people call that a 1, 2, 3 bottom. We eventually crossed the moving average, moving over, crossed down, but then we immediately captured. You know what? This actually looks pretty interesting above 54. The only downside to that is you have a lot of resistance. Again, where did buyers or sellers do something significant the last time? In this area here. So we're just kind of breaking through that. I would keep this on my watch list as a strong potential change of trend based on the last 4 weeks of price action, but I wouldn't be excited until it gets over 60. So I'm going to reevaluate that a little. Just, you know what's really cool too is that's actually a really good example of looking at multiple time frames to change your opinion on something, or at least to reevaluate a little bit. Amazon near breakout level as well. Under Armour getting a lot of play out of Jordan Spieth winning the Masters this week. All right, so we're going to actually filter this down just a little bit more, and we're going to go from change from the open up 2% to see what closed strong yesterday. And that brought out 17 stocks. So now we look at strong yesterday in addition to strong in the trend. So you can clearly see, filtering it down even more, APC, nice breakout, has filled the gap. Again, really good example here of technical analysis where it gapped down, filled the gap, got rejected, made a higher low. Pretty clean trend there, and now we push through. So again, something to keep on the watch list, not necessarily something to be trading yet. Schlumberger earnings today. All right, so essentially that's how to set up the game plan for today. We're going to just take it one step deeper, and we're going to go in and look at stocks that are in that same criteria. But this time we're going to, just in case we get a lower opening in the futures, which we have right now, and we follow through to the downside, we're going to see if there's any stocks showing relative strength that closed weak, so down 2%. And actually we have that whole sector. Interesting. So healthcare, Aetna, all strong stocks on a pullback. So in my vernacular, let me just show you what I have here so you help you fill out your own. If I go into my presets, You can see here I have weak stock, weak close, strong stock, weak close. And that's going to pull up some stocks on a pullback. So my goal is to help you not need me. No other way to put it, but first we have to go through all the basics to really set a good foundation. When you understand how to game plan, you have to match it with your own resources, goals, and risk tolerance. Have a great day, and we will see you tomorrow.